What's going on, everybody? Welcome back to another episode of the Trade for Yourself podcast, where my mission here is still very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So make sure you please like this. Make sure you please subscribe. Make sure you hit that notification bell so you can be in the know every single time that I drop an episode. I have been going live here on Wednesdays adding value, going live, adding value, going over what the market has been doing. And we're going to be doing, a little bit of review on what has happened over the month of July. Okay. Today was the last day of the third quarter. And so July felt like it was rough. And it was rough in a sense, but it kind of primes us up to have a pretty strong August and pretty heat up in August as the temperatures are getting hotter out there right now. So please make sure you like this, make sure you subscribe. Give me 1 second, okay? Give me 1 second to copy this link and share this link out so everybody can really truly tap in. I always appreciate everybody that really truly takes that time to tap in live, because when you tap in live, everything is just better. Everything is just better whenever you make that decision to really truly tap in live. So I thank you all. Let's go ahead and get to it. So the S&P 500, last week we were talking about how the S&P 500 was having some of the worst days it's had in over a couple of years. But now I believe the S&P 500 is headed back for a record high. Nvidia is up 13% in a day. Let's just go ahead and get into what we have for tonight and what's been going on in the stock market. So, as we look at it, the stock futures rose in overnight trading Wednesday as investors weighed the latest corporate earnings reports, including strong results from Meta platforms. So the S&P 500 futures gained 0.5%, NASDAQ jumped nearly 0.9%, the Dow Jones added 0.1%. So in the after hours, Meta platforms rallied 7% on stronger than expected second quarter results and upbeat guidance. ARM Holdings, a semiconductor company, they shed 10% after offering an underwhelming current quarter guide. So stocks are coming off of a winning session to where the S&P 500 rallied 1.58% for its best day since February. The NASDAQ surged 2.64%, and the Dow Jones was up 0.24%. So what happened today? Today we had the FOMC meeting, right? We had the FOMC conference, and those gains came as Fed Chair Jerome Powell signaled that the central bank could cut at its next meeting if the data continues supporting the narrative that inflation is easing. The Federal Reserve held interest rates steady. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September, Powell said. As of Wednesday evening, Fed funds futures trading indicated an 80%, 88% likelihood that the central bank cuts rates by 25 basis points at its September meeting, according to CME Group's Fed Watch tool. Ultimately, the market is counting on the rate cutting cycle beginning in September, despite how many times Powell tried to keep the Fed's options open. And the rally in stocks this afternoon began to pick up steam the more that Fed chair tried to put the horse back in the barn throughout the press conference, said Chris Zaccarelli, chief investment officer at Independent Advisor Alliance. Can't hardly even speak right now. Okay. Mega cap technology and semiconductor stocks bounced on Wednesday. Nvidia surged nearly 13% on the heels of a strong quarter from Advanced Micro Devices, ticker symbol AMD. The VanEck Semiconductor ETF, ticker symbol SMH, popped nearly 8% to secure its best session in more than a year. Amazon and Meta rose more than 2% each. Apple added more than 1%. And despite Wednesday's rally in technology shares, the Nasdaq finished July with a 0.8% loss. The S&P 500 added 1.1%. The Dow Jones was the outperformer of the three major averages with a 4.4% gain and its best month since December. And the Russell 2000, a beneficiary of investors' rotation into small cap stocks, advanced 10% in July. So the market's been doing well. We still got some things we got to pay attention to, though. The busy earnings week continues Thursday with key reports from Apple and Amazon after the bell. Intel, Booking Holdings, and Moderna are also on deck. And on the economic front, investors await jobless claims data, construction spending for June, and ISM manufacturing data for July. And the main event for the remainder of the week will be Friday's keynote July jobs report. Now, the market pulled back some earlier in July, but the S&P 500 still managed to close positively. The Nasdaq closed negatively, but only modestly. It was only modestly negative. Jerome Powell is giving us the indication that the Federal Reserve is going to lower interest rates. And if they lower those interest rates, is going to bode well for stocks. It's going to help stocks from a monetary policy, from an interest rate, from a borrowing standpoint. So we need to understand that, and we need to continue to pay attention to what's going on in relation to that. Now, I want to go to the charts. Now, I'm not going to go over as many charts as I have previously been going over, over the last week or so, right? I'm only going to go over a few charts here because there's only a few things that I really want to highlight and I really want everybody to understand. So the S&P 500, we closed at, SPY. Let's talk about SPY here for a second. SPY closed at $550.81. Now, we know what we've been talking about. We know that we understand that the market had been pulling down last week, but let's look at what SPY has been doing over a monthly time frame. What has the S&P 500 been doing over a monthly time frame? And if you look at what the market has been doing over a monthly time frame, and we just take a look at what's been going on this year, we can look at the chart and we can see that, when you look at these candlesticks, y'all, every single candle represents a certain time frame. So on the monthly chart, every single candle represents 1 month. So we had January positive, February positive, March positive, April was negative, but we had May positive, June positive. We thought that July was going to be negative, but it was not negative. It was actually positive because we got some good data. We got some good data from the market. Now, the one thing that I want to pay attention to is these wicks. Now, the bottom, now this is a green wick. This is a green wick. It's also a green candle. Now, the bottom of this candle represents where the stock market opened. The top of the top of this body, the top of the body represents where the stock market closed. Let me repeat that again. The bottom of the body represents where the stock market opened. The top of the body represents where the stock market closed, and the wicks represent where price went through this particular time frame. So SPY went as low as $537.45 this month, and it went as high as $535.16. But the one thing that I like, and the one thing that I'm paying attention to, is that we hit 565.16, but we came back and we closed the month right above the previous high from last month. So I believe that's a break and retest. I believe that we broke resistance of that 550 and we had to come back down to retest that 550. And now I believe we're going to continue to move higher. If you look at what's been going on, over the last few days, we got that bump that we need. The market had been hovering around that 547, trying to get through 547. Now we're above 547. Now we're at 550. Also, intraday today, we had hit 553.50 and we came back down to 550.81. So I think that's good for us in terms of continuing to move higher, right? Okay, so that's SPY. Okay, let's look at QQQ. right? Let's look at QQQ. What has QQQ been doing? Now, QQQ, you see a little trend line, right? We see a little trend line. We see a little downtrend here that I was drawing last week. I actually drew this trend line last week, but it's a situation to where we have had a strong green day because of good corporate earnings. Okay. The corporate earnings are doing exactly what they need to do in order for the market to continue to move higher. That is very, very important. I'm going to delete this right here, and I'm going to go to the monthly chart on QQQ. What have we been doing from a monthly chart here? Now we are negative on the month, right? We are negative on the month, but we're still at a position to where we're still bullish. We're still bullish from an overall perspective. So I wouldn't be worried about what we have going on for the month. Okay. Now, what's another one I'm going to look at? Let's look at ticker symbol IWM. IWM is the Russell 2000. The Russell 2000 measures small cap stocks. Small cap stocks do well when interest rates come down, right? Interest rates have the Jerome Powell has been talking about interest rates coming down. So small caps are going to do well as interest rates come down. You see this big green candle up more than 10% in a month. Now, the Russell 2000 has the potential to continue to move higher, right? Especially when we look at what happened in trading today. So we broke out to the 52-week high. We broke out to a 52-week high, but we came back down. We came back down. That's a good thing. That's exactly what we need to see if we're going to continue to move higher on this particular stock, right? If we're going to move higher. If we go back to the weekly chart and we just look at some information, we look at 234 as a potential level that this stock can potentially get to. We look at 244.46, the all-time high, a situation to where the stock can get here. Okay. This is one of the ones that we need to continue to have on our watch list, and we need to continue to watch, right? Because we can definitely have an opportunity as this particular stock continues to pull back. And the last stock I want to talk about is Nvidia, right? I want to talk about Nvidia. Nvidia, it was up almost 13% today. Okay. The stock was up almost 13% today. Now, the stock came down pretty significantly, right? The stock came down pretty significantly. The stock was at $140.76, and the stock came down to about $102.81. So the stock pulled back more than 26%, right? It was down more than 26%, but what happened, okay, was that we had a great quarter from AMD, right? AMD really truly got the semiconductors cranked up, and they got the semiconductors taken off, right? Nvidia is one of these ones that you need to be paying attention to, because this is one of those ones that could potentially be turning around. This is one that could potentially be turning around. Why do I say this? Let's go to the Fibonacci retracement levels, okay? Let's just take a look at the Fibonacci retracement levels. Now, why are these important? Why are these levels important? These levels are important because these levels pretty much give you an indication on certain discounts, that the market is giving you, right? So the stock came all the way down to $102.54, right? And we're assuming that the high was $140.76. That's the high that we're assuming. The 50% retracement level is kind of what I'm looking at, because if we can get back above that 50%, if we can get back above that 50% retracement level, this stock can continue its upward movement that it's been having all year. The 50% retracement level is 121.92. Well, guess what? In the after hours, the stock is to 121.30. The stock is at 121.30 in the after hours. So what are we talking about here? We need to be putting Nvidia on your watch list. You need to be looking at opportunities to get into this company, because we could be having a situation to where we could be going back to the highs. We could be going back to retake a 125 level, to retake a 130, to retake a 137, and ultimately get back to 140.76. That's where we're trying to get back to. That's exactly what we're trying to get back to. Let's look at the stock over a monthly chart, right? Let's look at what has the stock been doing over a monthly time frame. The stock has been going up. It has been going up, up, up. But guess what? We see this wick, right? We see this wick. Excuse me, I said a monthly time frame. This is a weekly time frame, y'all. So you see this wick came on down. It came on down, but we still closed the week. We're still positive on the week. We were bleeding down real bad just yesterday the market was bleeding out, but now we're in a situation to where this stock is probably going to close higher, almost to a situation to where this stock is probably going to close higher than higher than the level that it hit last week. So Nvidia, Nvidia. I'm gonna say it again. Nvidia is giving us an opportunity to take it back to higher heights, but we have to be ready. We have to be in position, right? Because Nvidia could really give us an opportunity to take that ride up. You want to get into stocks when they're riding up. You want to continue to follow that trend. And if we do exactly what we need to do, if we get above that 50% retracement level, if we continue that upward trajectory and take out some of those levels that we need, when the stock pulls back, we need to be finding ways to get into this stock. I'm telling you, we need to be finding ways to get into this stock. Last thing, before I leave you all, last thing, fear and greed index. We always need to look at the fear and greed index. Now, fear and greed index, just a week ago, we were in fear. Just a week ago, we were in fear, right? We were in fear. We were at 40. We were at 40 just a week ago. Just yesterday, we were at 42. Now we are at 52 in neutral. We are in neutral. We are at neutral in the fear and greed index, but that was a shift, but that was a quick move. That was a 10-point move that happened very, very quickly. Here's the thing. You have to pay attention when the market is shifting. The market is shifting back towards risk because of good corporate earnings. We still need Amazon to follow through. We still need Apple to follow through. The Federal Reserve and inflation, the rate of inflation continuing to lower, and the Fed telling us, hey, we are going to be cutting interest rates at some point this year, and just the market just doing well technically. The market going higher, pulling back, going higher, pulling back, doing exactly what we need to do in a bull market to continue to take advantage of everything that we got going on in the market. As always, again, I appreciate you all for tapping into another episode of the Trade for Yourself podcast. Please like this. Please subscribe. Reach out to me in the comments. Is there something specific that you want me to go over? Is there a particular stock? Is there a particular sector? Do you want me to talk about the Fed? Do you want me to talk about technical analysis? Do you want me to break down balance sheets? Do you want me to just go over what do you need me to do to be able to really, truly help you be successful and make money, build wealth in the stock market? As always, remember, don't pay for it. Trade for it. I'm going to tap in with y'all in the next episode.